All right, so week 30 is upon us. We are here. We promised you last week that we were going to get into all the things that need to happen when you receive and accept a contract on your home. So that's what we're going to do. We're going to keep our promise. All right. So good evening, everybody, and welcome back to our Wednesday webinar series here at Beyond the Home Realty. I am your homegirl, Daphne Brown, the broker owner of Beyond the Home Realty, situated right here in Brazoria County. And I help buyers, sellers, and investors across Rosharon and the greater Houston market with residential, commercial, and land transactions. So we're on week 30, but we decided for this title commitment, escrow, all of the things, we needed to break it up into two parts. Y'all know we don't like to keep you all day. So we want to still stay within our allotted time, and so we want to break it up over two sessions. So tonight is going to be part one of a two-part series called From Contract to Closing. If you've ever accepted an offer on your home and thought, great, now what happens? I don't know. Well, this is the session for you, and we are going to demystify escrow, earnest money, the option period, and one of the most misunderstood documents in real estate, the title commitment. We're going to run about 30 to 40 minutes tonight. So I'm going to go ahead and get started. And at the end, we'll go over some questions that we've received. If this is your first time joining us, welcome. You don't need to have seen the previous session to follow along tonight. And we do have those previous Wednesday webinars posted on our YouTube channel. And this session will be posted on Sunday. All right. So as I mentioned, I'm Daphne Brown. We're based right here in Rosharon, Texas, but we can help you in any of the Houston suburbs. And here's something I hear all the time. Sellers and buyers feel confident all the way through the offer and negotiation stage. And then when the moment the contract gets signed, everything suddenly feels like it's happening behind the scenes with people that they've never met. From escrow officers to title examiners to underwriters, names on emails that they don't even recognize. And so my goal tonight is going to be simple. By the time we wrap up, you will be able to read your own title commitment and you'll know exactly what's happening with your money every step of the way. So whether you are a first-time home buyer, a seller who hasn't sold a property in 15 years, or if you're stepping into a commercial or land transaction for the first time, the escrow and title process can feel like a black box. And so tonight, we're going to open that box up and let you see what's inside. And just a quick preview, next Wednesday, part two picks up right where we're going to leave off today, covering title insurance, protections, and your complete closing date checklist, okay? All right. So let's take a moment to recap where we've been in this series before we move on, because it helps us frame exactly where we are tonight. We started with the listing presentation. That's where we covered how a home gets priced using a comparative market analysis, how it gets marketed across the MLS and digital channels, and how it gets positioned to attract the right qualified buyers. So from there, we moved into market-ready prep. So the repairs, staging, the condition improvements that maximize showings, and ways to bring in strong offers and negotiate those offers. And that's what brings us to where we are for today's session. Under contract, you accepted an offer, you have a fully executed purchase and sale agreement in hand. Now what do you do? So if you've missed any of our earlier sessions on pricing strategy or getting market ready, don't worry. You can absolutely continue to follow along tonight. Everything from this point forward applies whether you're buying or selling, because escrow is meant to protect both sides equally. Today, in part one, we're focused on exactly two things. So what happens with escrow right after you sign, and how to read your title commitment. And here is our roadmap for tonight. We've got four topics. Number one, the escrow officer's role, who they are and what they actually do. Number two, earnest money and option period, including some hard deadlines you'll want to write down. Number three, the escrow process itself, step by step from your signed contract all the way to the day that the buyer gets their keys. And number four, understanding your title commitment, what it is, and how to read it with confidence. And again, a preview of next week, part 2 will cover title insurance protections, the most common issues that delay a closing, why a survey matters, and I'll hand you a complete closing day checklist. So let us go ahead and get started. So we're going to start with a question that I get constantly. Who is the escrow officer, and why does my money go to them instead of directly to the seller? And that's a really good question, but the simple answer is escrow is neutral, right? Escrow is a neutral third party, a licensed third party, not the buyer's team and not the seller's team. And the escrow officer holds the earnest money and manages the paperwork trail until every single condition of the contract has been satisfied. Now, I want you to pay attention to the word neutral because it's the whole reason that this system works. Since escrow is neutral, neither you nor the buyer can access those funds or force a change of terms unilaterally. That protection is exactly what makes the closing table something that's trustworthy for everyone involved. What does an escrow officer actually do day to day? Well, there are 4 main things. The first, they hold and disperse funds according to the contract. Your earnest money doesn't sit in my account and it doesn't sit in the buyer's account. It sits with this licensed, bonded, third-party title company. And second, they order and review the title report. And we'll come back to this in a few minutes because it sets up everything that we'll be talking about with your title commitment. All right, third, they coordinate with the lender, the buyer, and the seller. So all of the parties. Escrow becomes the communication hub for the transaction, essentially, especially once mortgage underwriting begins. And fourth, they schedule signing and they manage all the closing documents. When it's time to close, it's usually the escrow officer who reaches out to schedule your appointment. Now, here's why this matters to you directly. As your real estate agent, I'm not the one holding your money, okay? And I'm not the one clearing title, but I am your advocate. And I stay in close communication with your escrow officer throughout the entire process. And that means you're never left wondering what's happening or why something is taking longer than expected. You're never navigating this alone. I'm always here. And I love to be able to work hand in hand with the escrow officer, the title company. That is why these relationships and a realtor who can build relationships with different people in the real estate field, that is why that is so important. All right, so the next slide, this slide, I want to slow down because this slide has some real weight, all right? Let's follow this timeline from left to right. It starts with your effective date, all right? And that is the day that the contract is fully executed by all parties. This date starts the clock on everything else in the transaction. So make sure you understand this date. Then we hit day 3. Now this is when the earnest money and the option fee are both due to the escrow agent. That's a standard requirement under TREC Paragraph 5 of the Texas contract. Now, I'm saying day 3 for the earnest money for sure. Day 3 of option applies if you have an option period, but it's the same day 3, right? So if you don't have an option period, then you're signing the contract and you're going straight to pending. You don't care about what the inspection findings are or whatever. I always advise people to have some type of option period, okay? All right. Next comes the end of the option period. And this is the day that the buyer's unrestricted right to terminate the contract ends. And then finally is the closing date on or before the date of the contract. So closing will occur on or before the date stated in the contract. Now, let me back up for a minute to the option period. Now, the end of the option period, this is when I tell sellers, okay, you can go ahead and start moving forward with whatever your plans are after you sell this home. Because after this option period, I'm not saying we have smooth sailing, but the contract goes from option pending to pending. Now, there are things that can derail the transaction, like the home not appraising and things like that. But after your option period, where you've negotiated all of your inspection findings and all the repairs, this is when you can typically breathe a little bit, okay? Now, I want to talk about earnest money in plain terms. This is the buyer's good faith deposit showing that they're serious about the purchase of the property. At closing, it's simply credited towards the buyer's down payment. So you don't lose your earnest money, okay? Again, it's credited towards the buyer's down payment and the closing costs, okay? And if the deal falls through for any reason covered under the buyer's contractual rights, like during an active option period, or if financing or appraisal contingencies aren't met, then this amount is refunded back to the buyer from the title company. So the buyer doesn't have to chase down the seller saying, I want my money back, because the title company is a neutral party. They are the ones to give them the funds back, okay? Now, the option fee and the option period work a little differently, and this is unique Texas contract language. So let me define it clearly. Move that out of the way. For a relatively small, non-refundable fee, often just a few $100s, the buyer literally buys the unrestricted right to walk away from the contract for any reason, no questions asked, during a set number of days that have been negotiated. So they can wake up one morning and say, I got a toothache. I don't want to buy this house. They can wake up one morning and say, let me drive to the house. Oh, it's too much construction. I don't want to buy it. Whatever their reason is, that option period gives them the right to walk away for any reason, no questions asked, okay? Again, during that set number of negotiated days. Here's the part I want you to hear. These deadlines are not suggestions. They are strictly enforced. If a buyer wants to terminate and get their earnest money back, that termination notice has to be delivered before 5 o'clock on the last day of the option period. Remember, we talked about that in previous webinars, okay? So anytime after, one day late, in fact, even 5 minutes later, a day later, it does not matter, a couple hours later, if the buyer's agent does not communicate with the listing agent that the buyers no longer wish to move forward with the transaction before 5 p.m. on the day of termination, what the buyer has done is basically defaulted on the contract, which means, as a remedy, the sellers do have the right to keep the earnest money. Now, this is in most cases, right? Because the home still has to appraise, the title objections still need to come back clean, and then also the loan for the buyer still needs to get approved. So the buyer still needs to get approved for the loan. If all of those conditions are met, then the seller has grounds for keeping that earnest money because the option period termination deadline was missed. Here is how the homegirls prevent missed deadlines. Once we have an executed contract, we sent out a 1 or 2 pager that pulls all of those deadlines out so you can see it right there. And then we'll go ahead and send emails out so we can throw it on your calendar so it is not missed. So if you're a seller listening tonight, here's the reassurance though. Once the option period passes without a termination notice, the earnest money becomes much harder for the buyer to walk away from without forfeiting it. So that means that, you know, we got a little leverage on our side, seller, all right? So we can really, you know, kind of do some things. That's a meaningful psychological and financial checkpoint in your transaction. Keep that in mind. I tell every single client the same thing. Mark the option period end date on your calendar and make sure that you understand it, because more deals go sideways from missed deadlines than any other single cause. All right. And now the escrow process, contract to key. So this is the part where I like to get really detailed so I can make sure you understand it, because this is the part that people guess about, right? They're like, what happens next? What happens next? What happens next? So this is how it all stacks up, all right? Now, I'm going to walk you through each stage. The contract and the earnest money both land with escrow, right? The escrow officer reviews the agreement line by line to understand every deadline and requirement that they're responsible for tracking. This is in stage one. The buyer and the seller each complete what's called opening paperwork or seller and buyer information, right? So identification, wiring instructions, contact information, all of the things. And if there's a lender involved, escrow opens a line of communication with them right away, since financing deadlines often run in parallel with the title work. Stage two is title review, okay? This is where the escrow officer orders what's called the preliminary title report, sometimes called a title search. This pulls the full recorded history of the property, so past owners, liens, judgments, easements, all of the things. That report becomes the foundation for your title commitment, which we're going to unpack in just a few minutes. Escrow reviews it for red flags, existing mortgages that need to be paid off, unpaid property taxes, or liens from contractors, or even HOA liens. Once that's clean, or once any issues are flagged for resolution, escrow delivers the full title commitment package to everyone involved for review. Stage three is preparing to close. If the buyer is financing the purchase, their loan documents arrived and get reviewed by escrow alongside the lender's closing instructions. Escrow and the agents coordinate a firm closing date and set up signing appointments. This is also when we will speak specifically about scheduling the closing. And yes, you do have some say-so in that. Give me 1 second, okay? We'll get to that. The buyer deposits the remaining funds, if any, that are required to close. And I want to be clear, that's separate from and in addition to earnest money that's already on deposit. And the lender gives their final clear to close approval and wires the funds to escrow. And stage four is closing day. I know I went through this kind of fast, but here are the 4 stages of the escrow process. And stage 4 is really important because this is when funds are dispersed, sellers' proceeds, agents' commissions, and any existing loan payoffs all happen during this stage simultaneously. The documents, most importantly, the deed, are recorded with the county clerk's office, and that's the legal act that officially transfers ownership. And the buyer receives their keys once it's funded, typically from their agent once the recording is confirmed. I like to think of these 15 steps as 4 checkpoints: opening the title, clearing the title, getting financing and funds in order, and finally recording and handing over the keys. Every deal I manage follows this same rhythm. Sometimes they move faster, some of them move slower, but the stages themselves never change. All right, so here are the 4 stages, and you'll be able to again catch this in a replay once we go ahead and get that out. All right, this is the slide a lot of you came here for tonight, so let's spend some time right here. I actually want to ask, has anyone ever read their title commitment cover to cover? Let me see. Oh, okay. Most people don't, okay? Most people don't, but a title commitment is exactly what it sounds like. It's the title company's written promise that they will issue a title insurance policy once certain conditions are met. It's broken into 4 sections called Schedules A through D. And once you know what each one is looking for, the whole document stops feeling like legal jargon and it starts making some sense. So let's go through all 4. Schedule A is the actual facts. This tells you who currently holds titles to the property. That's the seller of record. It gives you the full legal description of the land, not just the street address, but the lot, block, and subdivision, or meets and bounds description if we're talking about acreage or a land deal. And this section lists the proposed buyer, the agreed sales price, and the lender if financing is involved. Think of Schedule A as a who, what, and how much to the transaction. All right. Schedule B is notification. All right. This lists items that limit or affect the property, but aren't necessarily deal breakers. Things like utility easements, building setback lines, deed restrictions, HOA requirements, and anything the title policy will not cover. This is your notice list. It doesn't mean something's wrong with the property. It means there are things you're agreeing to live with, like a utility company's right to access an easement in your backyard. And Schedule C is clear to close. These are the must resolve items before the buyer can actually close. Things like existing mortgages that must be paid off, questions about marital status affecting ownership rights, unpaid property taxes or liens. Think of this as the punch list. Every item on Schedule C has to be cleared, released, or paid off at or before closing. This is usually where the escrow officer and the title company are working hardest behind the scenes. And Schedule D is disclosure. This is required by Texas regulation. It discloses every party who collects a portion of the title insurance premium. So the underwriters, the title agency, and any attorneys involved, along with those dollar amounts. This is purely a transparency requirement, so you can see exactly who's being paid and how much for handling your title work. All right. So here's the practical takeaway. When your title commitment lands in your email box, don't just skim over it. Check Schedule A to make sure your name, the legal description, and the sales price are all correct. And read through Schedule B so nothing on that easement or restriction list are surprises for you later. And if you see anything on Schedule C that you don't understand, that's exactly the kind of question to bring to me or directly to the escrow officer, because at the end of the day, that is what we are here for. All right. Now let's recap what we covered tonight, because these 4 points really are the heart of it. Number one, escrow is neutral. It protects both the buyer and the seller equally. Neither side can access funds or change the terms unilaterally. Number two, deadlines are firm. Earnest money, the option fee, and the option period all run on a strict clock with TREC Paragraph 5. Time really is of the essence. Number three, escrow moves through 4 stages: opening the file, title review, preparing to close, and closing day itself. And number 4, your title commitment has 4 schedules. A tells you the facts. B tells you what to be aware of. C tells you what must be resolved, and D discloses who's being paid. All right. Yay. Okay. So next week, we're going to go even deeper. We'll cover exactly what your title insurance policy protects you against, the most common issues that delay a closing, why a survey matters, how to read your closing disclosure, and I'll hand you a complete closing day checklist so you know exactly what to bring and what to expect. If tonight's session gave you an aha moment about the title company, then that means I did my job. Real estate should never feel like a mystery. My job is to make sure that you understand every document that you're signing and not just sign where the sticky notes tell you to, right? And we are now going to get to some questions that we have received. All right, we're going to walk through them. It's just a couple questions that we've gotten in an email or in our inbox, or if our current clients have asked, we like to just bring them, because if one person has a question, typically other people have questions, right? All right. What is earnest money in a Texas contract? All right. And in short, earnest money is a good faith deposit. Okay. A buyer deposits this money. After a contract is signed, they have 3 days to get this to the title company. It lets a seller know that we're serious about purchasing this property, and we're going to do everything we can to get whatever we can, whatever we need to get in order to be able to purchase this property. And the title company is neutral. They are not controlled by the buyer. They are not controlled by the seller's agent, the buyer's agent, the lender, none of that. They are neutral. All right. The next question is, how much earnest money is typical in Texas? And legally, there's no minimum, but commonly it runs between 1% and 3% of the sales price, or sometimes a flat amount, right? So right now we're seeing new construction homes, $2,500, $3,000, or $5,000, sometimes even more depending on the price point that you're in. On resales, typically earnest money is 1% of the sales price. All right. Is earnest money refundable in Texas? Yes. Yes, it is in many circumstances. If the buyer terminates during the option period, they are required to get that money back through the title company, okay? If a deal falls through due to appraisal or any type of contingency, maybe the buyer can't get financing, yes, typically they will get the earnest money back. But if the buyer defaults without a valid contractual protection and reason, the seller can keep that earnest money. Now, what is the difference between earnest money and option fee? Well, earnest money is a refundable good faith deposit tied to the purchase of the property, and eventually that is applied to the buyer's costs, right? So they never lose it. They always get it credited at closing. The option fee, however, is optional, right? It could be just a couple $100. It could be, I've written it as $100, $150, $200, $350. Again, it depends on the purchase price and the negotiations, really. And so that option fee is optional, but it gives a buyer the unrestricted right within an amount of negotiated days to terminate and walk away. And normally during that option period, whatever number of days has been negotiated, that's when the buyer gets all of their inspections done. Now, how long is the option period in a Texas home purchase? That is negotiated in the contract. Sometimes I've seen it as 3 days, 5 days, 7 days, 10 days, some 14 days. It really depends. It could depend on the size of the property, how many inspections that property needs to undergo. Say, for instance, if there's a water well or 2 water wells. Say, for instance, if there's a septic. Say, if, for instance, if the property needs foundation work. Like, all of these things are negotiable, okay? All right. What happens if the option period deadline is missed? Once that option period expires, the buyer's unrestricted right to terminate ends. That does not mean that if the home doesn't appraise, they can't get their money back. For certain, they can, if the agent has protected the buyer. That doesn't mean if the financing falls through, they can't get their earnest money back. In certain situations, if your agent is protecting you, you should be able to get that back. All right. And the last question we're going to go over, we have about 10, but I'm just going to finish these and then we'll catch the other ones in next week. What does an escrow officer actually do? Well, again, an escrow officer is a neutral third party. They don't represent the buyer or the seller. They hold the funds. They place the orders for the title reports. They coordinate with the lender. They balance everything to make sure we're ready on closing day. They, this is how much money you need to bring. Any wires you send, they're responsible for collecting those wires, and they manage the paperwork and the signing process until every condition of the contract is satisfied and when the sale can close. They manage all of those things. Now, one of the questions I got is, can a seller or buyer determine when they want to close? Yes. For sellers, when you are receiving a contract from a buyer and you're negotiating it, if that close date does not work for you, that's when you should speak up. If you are a buyer, right, you want to not ask for 90 days because, if it's a new construction home and the home won't be available for 90 days, okay. But if it's a resale, most of the sellers aren't going to want to hold that home for 90 days for you if you don't come with some serious cash, more option money, things like that. All of the things are negotiable, but you want to make sure that you are being within, reason. You want to make sure that you're making sense, right? So have a conversation with your realtor about that. And then that's the last question we're going to go through today. Also, make sure that you pay attention and follow us on Instagram, because some of these questions, I think I will put them as, I either may do a separate YouTube video or I may throw them up on Instagram. I'm not sure. Just make sure you're following us so you get the answers to all of those. And if you have any questions at any point in time, DM us, text us, call us, email us with your question, and we will get the answer to you. The people that ask these questions, yes, they already received their answers. So we're not making them wait for today, but we just kind of recorded the question because, again, we figured if they have that question, then others may have that question. So again, part 2 will happen next week, and we're going to be talking about title insurance and closing day, running you all the way through that. I want you to remember that if you have any real estate related questions or issues or concerns, give us a call, pick our brains, let us know what you're thinking, or what you're having trouble with. If you know someone that can benefit from this webinar, please pass the information along to them. We're here every Wednesday at 7 p.m. and the recordings go out the following Sunday. All right. So for all of your real estate needs, we want you to remember that the homegirls are always ready and willing to enable you to find your way home. Till next week. Bye-bye. Just in case you missed our live Wednesday webinars, which, we always want you to be part of, so I'll leave a link in the video description. But here are some of the topics that we've already covered. How to protect yourself against appraisal shocks. What are the closing costs? How are they computed? Please explain those to us. How to fight property taxes and keep them low. What happens after we close? How do we move in like a pro? How do we, as a seller, protect our price? How do we prep our home? How do we digest the seller feedback that's coming in for buyers? How do we get pre-approved? How do we buy and sell at the same time? What is going on with these builder incentives? How do we get our interest rate lower? Listen, all the things. If we haven't already covered it, we're going to get to it in these 52 weeks, and we encourage you to go to the playlist and start binge watching. If there's some topics that we haven't covered and you'd like to see us cover them, do by all means drop down in the comment section and let us know. We want to hear from you. But make sure that you are liking, following us, subscribing to the channel so you don't miss a thing.